Good afternoon, Market Minds. How's everyone doing? I know it is not Scott Bauer here. You have Howard Greenberg, Crypto Room Coach here. All right, strap in. We're going to talk about what happened on Friday because it wasn't a dip. It was definitely a detonation. Mike, I can't share my screen for some reason. There we go. Okay, there I am. But today we are going to talk about what happened on Friday. Most of you, I'm sure, know about this already. I just realized I don't have the chat open here so I can see what you guys are saying. How's it going, Dorothy, Bill, everybody? Hope everyone's doing well today. Please, yes, hit the like button, all that fun stuff. Follow, like, all of those good things. Good to see everybody in here. Okay, so Friday, definitely, like I said, not a dip, definitely a little bit of a detonation. We saw a huge amount of liquidations. CoinGlass clocked in nearly $19 billion in forced liquidations. What's up, Robert, Julia? Good to see you guys. Bangs, everybody. How are you doing? That's not a typo. $19 billion in liquidations, largest ever, 9 times larger than we had ever seen. So keep that in mind. It wasn't the largest drop, but it was the largest amount of futures that have ever been liquidated by 9 times. And remember, these are futures positions. They vaporize. More than $450 billion in total market cap evaporated across the weekend. Bitcoin dropped from 121 to 106 faster than you could say by the dip. And altcoins, some of them look like roller coasters with what we saw there, down 30, 40, 50% intraday on certain exchanges. So today, we're here breaking down exactly what happened, how much money really disappeared, who may have lit the fuse, why that pricing broke on multiple assets, and what this crash really tells us about crypto's messing plumbing. Hello, Al. How are you today? First up, let's get into a scoreboard of what happened. The crash literally took a matter of minutes. And again, over 1.6 million positions. So 1.6 million accounts got liquidated. Bitcoin fell 12%, Ethereum 15%. Some alts on certain exchanges fell down as much as 80%. Like we said here, this was leverage and liquidity imploding together. Question is, what caused it? What was the spark that led the fuse? The headline was, of course, the tariff escalation between the US and China. Traders were already much on edge. Liquidity was thin, and leverage was maxed out for many retail traders. So, and we're also going to throw in a conspiracy theory that we're going to call the Garrett Gin angle, just to make it more interesting for everybody today. Again, please hit the like, follow, smash those buttons. Love to hear that. What are your options? That is amazing. And good to see you, John, and the rest of you, Danica. Hello. So what happened here is a cross of a few different things that all led to this happen. Like we said, there was the macro shock that happened with the US-China tariff threat, forced, stock market down, depending on what entity you're looking at, down 3-4%, right? We had a huge amount of leverage across the perp and altcoins market. And what we're going to find out as we talk about, like I said, the conspiracy angle is there was some collateral mispricing on some major, and especially on one hugely major exchange. And then one of the problems that came to light from this crash, and that is important. Hey, Gary G, how are you doing? You changed your name there. I love it. And not only that, but where the problem still is the fragmented liquidity within the crypto industry that causes us to have exasperated meltdowns like we saw here. So, all of these things hit at the same time. Collateral was based on Binance on 3 different assets that were specific to Binance, a stable coin called USDE, their Binance version of wrapped Ethereum. Yes, Michael Clark. And yeah, and this one's true whether you look at it. It's just going to be how we put the needles in place on our conspiracy wall. Okay, Al. It is, this one is definitely confirmed, but we'll do it. And what I mean is during that crash window, which was between 5 and 5:30 or so East Coast time, USDE, I think I have it on the next page here. Sorry about that. And what I'm talking about is there was a major disconnect or a major depegging of coins on Binance. Binance is the largest crypto exchange in the world by a wide margin. Okay. And I will tell you, they are paying back the impacted users $283 million. So during that crash window, Binance's internal pricing mechanism that handles 3 different coins was under repair. Supposedly the timing of this is a coincidence, wink, wink, coincidence, that this gentleman that we're going to talk about in a second, Garrett Jin, placed a huge short position on the market, just as this pricing mechanism was going down. And people knew that they were going to bring down the pricing mechanism, but they only knew it in a 30-day window. Binance basically said in the month of October, we are at some point going to fix the pricing structure on a coin USDE, on a coin WBETH, which is Binance's wrapped Ethereum product, and BNSOL, which is Binance wrapped Solana. When this happened, the mechanism caused this stable coin that is supposed to stay close to $1 to drop to 65 cents on Binance. Okay. On no other exchange did it approach that price. It never got below 90 cents on any other exchange. As a result, that coin was a huge amount of collateral and leveraged accounts, because it was a stable coin that pays 12% APY. What do we think about stable coins that pay over 10%? They are not sustainable. Avoid them at all costs. Again, any stable coin that tells you they are paying more than 10% yield, please stay away from it. People did not do that. It was a huge amount of the liquidity for collateral for folks that were trading all kinds of different coins. And what happened? Their collateral got cut by 1/3 when they were not expecting it. Okay. So that localized Oracle failure triggered liquidations both across Binance, and then because of one of the benefits of blockchain technology, where algorithms quickly take advantage of any mispricing, the market quickly closed that loophole down. And it did that by bringing markets down across the globe while bringing Binance's prices up. Okay. So by the time we were all said and done, you know, it was thousands of positions that were instantly liquidated, even though some of them were on other venues that had the problem. The majority of this was on Binance, where we see the majority of trading happen outside of the US. Okay. Binance later acknowledged the issue and paid about 283, so $250 million to affected users. So yes, there was a glitch, but that is cold comfort to traders who got blown out of positions in seconds, especially those that were not Binance, Binance traders, because they did not get any money back, even though they were affected. So what did this bring to light, and what do we now have to think about? And I will tell you that that gentleman supposedly, oh, yeah, I missed that one part, right? No, where do I have that? Oh, so the Garrett Gin angle. I'm sorry, I don't have it on a slide. I thought I did. So not every good market crash has a mystery trader. This time we did enter Garrett Gin. Garrett opened up a huge short position on Hyperliquid just minutes before the tariff headlines hit, and netted a $200 million profit within that meltdown. I will tell you that Jin denies any insider connection, but the timing is, to say the least, cinematic. And it's what led to it. Garrett Jin is known throughout the crypto world. He is a Chinese national. He is a crypto Bitcoin OG whale. And he at one time was the CEO of Bitforex, a crypto and forex exchange that was shut down for fraudulent activity. So when we say conspiracy theory, this one really has a lot of legs to it. So even those of you that do not wear tinfoil hats like I do, this one smell, there's definitely a lot more fire where the smoke was started here, rather than that. And to be clear, one trader can't nuke $500 billion of market cap, but that's a big enough short in a thin order book that it can absolutely tip the dominoes. And that's what it did. It started a capitulation, and that, exasperated through other problems. And those other problems were this depegging. And then another problem that I want to explain is a lot of people don't realize that, unlike the stock market or the futures market or the option market here in the US, every single exchange has its own liquidity in crypto. So, whether or not you know it, if you're using Robinhood, Thinkorswim, Schwab, Fidelity, JP Morgan, it doesn't matter. We are all trading those stocks on the same order book. Okay, there is a central clearinghouse, a central order book, and that is where all of it comes from. In the case of crypto, that is not the case. Every single exchange operates its own order book. In normal times, arbitrage is what keeps price aligned. But when chaos hits, that's when these bridges break. So a bigger takeaway is that a problem that we thought was solved in the crypto world is not solved. And we proved that on Friday. And it means that local issues can break down into bigger problems. So, every exchange, whether it's Binance, Coinbase, Bybit, they run their own order books. And in normal times, what keeps those from swaying too far apart is arbitrage. For years, Sam Bankman-Fried made billions by being an arbitrage trader. They were trading when there was what was known as the Korean, what is known as the kimchi premium, because in Korea, where there was a very regulated and controlled crypto market, Bitcoin traded and crypto traded at a much higher price than it did in other markets. FTX found a way through that and was able to arbitrage it. And arbitrage is for years made it is where a lot of traders made money. That was a true trade. Market makers were not naturally neutral. They would be making their money by arbitraging prices across exchanges, but that has pulled back. But what we saw on Friday is that those arbitrages pulled back, credit limits tightened, and suddenly Bitcoin might trade 5% lower on one exchange than the other. And the liquidation engines don't care. They react only to local prices. So if Binance prints a flash crash candle, your Bybit position can get liquidated even though the global market didn't fall that far. So it's you have to almost imagine if the S&P 500 traded at 5 different prices depending on which broker you used, and your margin call came from the worst one. That's how crypto currently operates. So, that's what we've got to know and understand. I have often talked about that, and it will be interesting. I will tell you that this has reverberated through Washington, D.C. already. The crypto proponents are fighting back against the anti-crypto lobby that's pointing out about this crash. They're calling it obviously manipulation, and it has threatened a little bit of the movement that we have in regards to what is called the Clarity Bill, which is the bill looking to set proper regulations and guidelines for crypto so that we don't have as much of this problem. And what does it mean? Exchanges definitely need to get, there we go. What are some key takeaways there that we want to talk about is that, we need to look for avoiding collateralizing loans with synthetic or staked assets. There needs to be better oracles that are multi-venue price feeds with circuit breakers and clearer collateral rules. I think that what we'll see is a move here in the US to push crypto exchanges to use a combined order book, and that's not a problem. That's how Uniswap in theory works. Anyone can connect to their order book. So it is part of the crypto realm. It just would be moving from the decentralized side to the centralized side. There. So that is, that's one of the things to keep in mind. I do want to make sure, I didn't mention the word of the day yet. The word of the day, Mr. Bauer thinks he's a funny guy, is my nickname, Hondo. So word of the day is Hondo. Please type it into the chat if you would like to be entered into our swag giveaway. And I will answer you in 1 second, Dorothy. Now I'm going to be confused. I'm going to think people are asking me questions when you just type it in the name for it. But again, Hondo is the name. While you're doing that, please hit the follow, like, share button, all of those fun things. Help us get the word out to more retail traders. Your question, Dorothy, going back was collateralized assets. It means do not use. So in the case of this, they were using a stable coin that was offering 10% APY for holding it. Don't do that it's fine to stake coins to earn an APY. Do not use them for collateral for your other trades. Does that help, Dorothy? And what it is like I said, is that and it's something we saw much more in the old days. People, all of the futures trading in the old days was done as Bitcoin as the trading pair. So Dorothy, what used to happen was if you wanted to trade a perpetual future on Ethereum, you would use your Bitcoin as collateral. You didn't have stable coins. Use stable coins for collateral if you are using margin and leverage. And what you need to know is leverage is a privilege, not a personality trait. And what I mean there is leverage means in the world of crypto can be up to 100x. It means if it moves 1%, it liquidated all your money. So do not do that. We don't trade with high leverage. In the US, we are lucky they limit it to 10% or 10x leverage already, and that is only on Bitcoin and Ethereum. All the rest are at 5% or not 5%, 5x again. So we do not have as big a problem here in the US. That's why we didn't have the exasperated prices that we saw. Oh, I didn't know that. Oh, I am sorry. It's no swag. It is entrance to a Vegas wheel where you will be able to go to our trader experience in Las Vegas. So I apologize. No swag. It will get you handled. And yes, that is why. Wow, Barry, you're the first person to ever get that. Everybody always goes with Hondo being for John Wayne. Hondo, yes, it is. It is. I was a mediocre basketball player, and my coach gave me that nickname, and that's not a compliment. If you're in Boston, it means that you have hustle, but not a lot of ability. So, and Dorothy, yes, we don't trade with high leverage. Trading with leverage is okay, but do not, and what you saw is exactly that, a flywheel where people are Rafi game. People are using leverage and more leverage and more leverage and more leverage. And then they're using it as margin, but we don't see it as much anymore, but we saw the problem. It was really exasperated by that one coin, Dorothy, that USDE, which was a very, very speculative based thing to use for collateral, quite honestly. And when they depegged that down to 65 cents, it meant if you thought you had $10,000 in margin, you only had 6,500, and that can be, really, really, really bad for people, and especially, and I will tell you, hey, Paul, and that's what really, really caused it. And like you said, there is, the key takeaways is do not use leverage during uncertain macro events. It's one of those things is that's the case. You got to, this is a tough one. I put in here, use exchange with strong oracles and mark price models. I would have told you that Binance is one of them. So that's a tough one. I'm just saying there to stick with your Coinbases, stick with your Krakens. Don't go chasing the newest exchange with the lowest liquidity that's promising you a return on a stable coin you never heard of that you can use as collateral. What I'm saying is use USDC or USDT or a similar product of that size on a big exchange like Coinbase, like Kraken, to do your trading. And keep in mind that liquidity is local until it isn't, means that, again, if the exchange that they manipulate is as big as Binance, then that's the problem. Bido, that's AJ, that's a tough one. I mean, that's a smaller, it's hard for me, everybody that's around here knows that for a long time, we traded in the crypto room using KuCoin, which I would compare to Bitto. But my idea would be, you see the threat that happened over this past Friday, and I wouldn't want to be on the side. Gemini is a great one, tech support. Gemini, again, tech, great one. All the US-based ones. When I say Coinbase or Kraken, Gemini is in there. Binance.us doesn't have enough liquidity yet, but they'll be in there. Robinhood with their product is good enough. You can use Webull nowadays. There is a bunch of other, what I'm saying is be careful. Those ones, because Bido, I know also AJ has high leverage. Avoid those ones that offer 100x leverage. because that's where these mispricing and Oracle failures would happen. Bybit's one of the biggest out there, Danica. They are. It's again, it's hard for me to say anything wrong with Bybit. They are better than KuCoin in my opinion, but they are not a U.S. regulated entity. So again, I'm sticking right now with U.S. regulated entities, if that makes sense. So I don't want to badmouth the others, and some of you might not be U.S. based entities. If you live outside the U.S., this doesn't pertain to you. But you know what I mean is I'm looking at the ones that are U.S. based, U.S. regulated by the CFTC, because those indifferences are going to be. Zora, how did you miss all this? There you go, David. I love it. Yeah, and there's a lot of them that do suck, for sure, David. I just don't necessarily know that. That what do you call it is one of them. I don't know it that well. I just realized I got to pull up my Slack here, Michael. Sorry, so that I can get that from you. And that's not how I do it. Hit this. Bring this up. Okay. Oh, we got a big one today. Are we ready, everybody? I got to get back to the screen so I can see all of you. That's this one. No, it's not. That's, oh man, I don't know which one it is. Okay, well, I'm going to hope I didn't shut you guys down. Are we ready, everybody? Oh, there you are. I see you now. Okay, here we go. Jennifer Balestreri, you are the winner. And if I can find where my screen is again, that would help me a lot. That's not it. Michael Clark, can you take us out? Alt-tab. Still not working for me, Mike. I don't know what I did. I don't know how I lost it. Now I look like Scott. I lost it. That's because I have 872 things open right now. That's not it. That's not it. That's not it. Oh, there it is. StreamYard. I got it. I moved it away. Oh, that's what I did wrong. Now I feel bad. Hey, Mike, we're going to need 2 winners today, so I might get fired for this. But Jennifer Balestreri won when nobody could see it. So add her to it, and I'm going to redo it again. So Jennifer, if you are here, please let us know you are here, Jennifer. So you do have to show me you're here, Jennifer. You are here. Oh, well, I don't know how that happened. Well, that one's not on me. So I am going to spin it again anyways then. So thank you, Jennifer, for being the most honest person in the room. And we'll try again. And we have Kevin Anderson. Woo, 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 woo. Oh, I know there, Jennifer. I appreciate you letting us know that. And Ross, I can't believe you ratted your wife out or your daughter out or whomever it is there. How you doing, Ross? I haven't seen you in a while. Hope all is well. Kevin Anderson, are you here? Awesome, Ross. Kevin, are you here? I hope Kevin didn't leave because I don't see anybody. Let's see. Mike, are you seeing it? Kevin. Well, going once, going twice. Kevin is gone. Okay. That means we go. Oh, wait. Is that Kevin? Kevin, is that you? Now I'm confused if that's Kevin is Kevin. No, it isn't. Okay, then we're spinning. Here we go. Zora, I don't have that ability. Todd Lindbergh, a frequent member of the wheel. Ah, sorry, Kevin. Todd, are you still here? Todd, are you in the room? Todd, are you here? Please hit that like button. Thank you there, Zora. I don't know, Mike. Where did everybody go? And yeah, it figures John. You were quick, John, to say that. Here we go. We're gonna try one more time. Here we go. Yeah, they don't like conspiracy theory guys. Oh, no way he wins again. Oh, come on. That can't even happen. Oh. Yeah, I didn't do that, Mike. Come on, please be in the room. Jocelyn, are you in the room? Please be in the room, Jocelyn. Oh, man. This is a conspiracy. Jocelyn, are you in the room? Yes, we got it. Okay, there we go. Ah, nice try, Al. Okay, everybody, thank you so much for joining me. Awesome. And I just got to tell everybody, just be careful out there. Leverage is still built up in the crypto market. I don't think that we are headed straight back up. I think we got a little bit more pain. We need to see this leverage come out of the market before we move back up. Have a great day, everybody.